So hey folks, how's you all doing? So on this video I'm going to review the entire week. Okay, so yeah, let's get into it. So as we can see here, on the previous week we can see that the price expand and gives a pullback into this large BC, and the price is trying to pushing higher to this reclaimed CB. Okay, so this is a pattern which we call three drives pattern. Okay, so this three drive pattern means the smart money is trying to position off. Okay, they're selling or they're booking their profits right here. Okay, that is what mean by three drives pattern, which ICT have been told in his mentorship. Like three drives pattern is a classic price action pattern. It's really good to indicate that we are likely to see some measure of retracement. It can be a lot of reversal too. Okay, so this is that pattern. Okay, so as we all know that when we frame this dealing range, we are in premium, too much premium. So whenever we are in premium, there is a inefficiency too. The price have mitigating there. The price is resisting there. As you can see here, the constant encroachment level is like what the price, the wicks are doing the damage. The bodies is under the constant encroachment level, and we have what low resistant liquidity. Since we see this, we could expect what we could expect to take out this low and just going to the RTH chart. You can see here when the price reach the premium level, and we need to see that these low resistant liquidity has to be ran out, and the next logic is what this inefficiency. Okay, this inefficiency is not balanced. So yeah, when the price is trying to take out this low, we can see some sort of measurement price action here. Okay, so the price came all the way come into it. So now we need to see what I'm expecting to the price take out this all buy side liquidity all time high. Yeah, so that was my narrative for this week. Okay, so let's start with the Monday, what happens. Okay, so onto the daily chart, as you can see here, we have mitigated and we have rejecting from what we have rejecting from this premium CB. Okay, reclaimed CB. Okay, so this is a Monday candle, and as you can see here, the Monday has been taken previous week's high. Okay, this is a Monday, this is the previous week's high. Okay, let me show you. Yeah, this is the Monday, current week's first Monday, and this is the previous day high. We have taken that. Okay, since we have taken that, go into daily chart and mark it. Okay, so you need to know you need to know it, it has been taken. So just mark it. It's like a great thing if you mark previous week's high, plot it in the chart. Okay, it's better to know it's have been taken or not if you are going to the lower time frames also. So previous week high. Okay, so yeah, so we have taken the previous week high and just going to the 4-hour chart. I'm just observing what's really happened. Okay, so let's go into the ES. Actually, let's find if there are any SMT right up there. Okay, so on the ES, yeah, on the ES we actually have SMT, right? See, the Friday 14th 6 a.m. high has been taken on the NQ, but Friday 14th 6 a.m. high has been not taken. So what we have SMT, which means a smart money reversal. So what you can anticipate right here, the smart money is squaring their position and they are creating smart money divergence. Okay, which means they are really closing their positions, and the market is dropping right from here. So that is an indication that what we could see some sort of reversal to take out these low resistant liquidities and need to balance this inefficiency. Okay, so I hope you got the point. Okay, so we got the SMT, and what we need to expect next. Okay, so I just go into the hourly chart. Okay, so we have got what we have got SMT. We have taken the previous week high. Okay, then see, I will just remove this. Okay, and I will just remove yeah, that's enough. Yeah. So what happens on the Monday? Monday, we the Asian session has been trending, and London has been consolidating and making the high. And what is our drawn liquidity? What is our drawn liquidity? What you can see here, actually? Okay, we have new weak opening gap is pending there, which is inefficiency in the market magnet. And the other thing, we have Asia low, Asia relative equal low, and the London made the high, and we have SMT. Okay, so many like high volume of confluence there, that the price need to reverse into sell side and to take out this new week opening gap, Asia sell side liquidity. Okay, so I just forgot you to talk about the economical calendar. Just let me add into it. Okay, so you can understand the price clearly. So I guess it's just too much screenshots. I'm sorry. I'm just learning the core content, so it's too much screenshots. Shit. I guess this is current days. Yeah. So let's read the economical calendar. That there is no major news like CPI, FOMC, NFE in this week. So to avoid the Monday, if you can, or else you can trade on the pre-market or the last-ish macro. Okay, so that is a protocol for this week on the Monday. Okay, so let's see what happens on the Monday. So as to the protocol, they said that we have no major news in this week, so we can trade be careful on the Monday, or else you can trade on the pre-market or the last-ish macro. So let's see. After the market opens, we have drawn liquidity, we have smart money reversal, and we have taken the major previous week high liquidity, and we could see some sort of reaction into these levels. Okay, so the London made the high, we got the SMT. Let's go into the 50 minutes chart. Okay, 50 minutes chart. Here the London high has been taken. We are distributing here from to sell side. Let's go into the 5 minutes chart. After the session opens, New York session opens, there is actually a valid setup which I have missed to take it. Okay, currently this trade happening time I was in outside, so unfortunately I couldn't take this entry. Okay, so what happens, the price have distributed sell side, and the price is respecting this CB. Okay, as you can see here, the price is actually respecting this CB. Okay, and other we got another structure break, which is the price have taken this low, and we got the structure break, and this is actually a great entry when the price came into this CB. I was interested to take this entry if I was available in the market. Okay, and I will easily target for Asia low, and you can also target for this new week opening gap also. So this is the pre-market trade, which is great. As you can see here, the market is created SMT, and the structure is also creating sell side view. So obviously you can take this entry. I would be interested to take this entry because I don't like we didn't get a clear structure here, and this is just a pullback into balance is busy. After this change state of delivery, it's great to enter here, and I will be easily targeting this Asia low and this weekly open. Okay, so we have studied that multiple times. Whenever we have large run happens on the pre-market, the after the market opens, after the 9:30 opens, it can be cause of choppiness. Okay, and the other thing, the three major reason why the market is chopping here, and that thing I have told you in the live session also. Okay, this is the thing you should need to understand in the market. Unless you understand this topic in the market, you can't be profitable. Okay, So the one thing is, you have no news on the Monday. Okay, that can be cause for AM session choppiness. You have no drawn liquidity left here. Okay, so your drawn liquidity has been taken. Okay, when taken on the pre-market, your drawn liquidity, which is this gap, this Asia low, London low, this low, off session low, this whole drawn liquidity has been taken on the pre-market. So there is no dollar left in the market, so that can be a cause for consolidation after the market opens. And we have large move happens on the pre-market, that can be also cause for AM sessions consolidation. So whenever you see something like this, you should not be trading on the what, you should not be trading on the after the market opens. Okay, so let's calculate how much movement has been for happen on the pre-market around, I guess so, like it's 168 points movement has been done. Okay, so we have large move happens, we have no drawn liquidity left, we have no news on the Monday, so that can be a cause for after market open consolidation. And we got what, we got clean move on the pre-market, and we got clean move on the last ditch macro. Okay, so I just want to talk to you about what did you have been learned from this. Did you see something here like no news day, look for setup on the pre-market 7 to 9:30. If AM session is choppy, wait for the last ditch macro. Okay, so what is this, 7 to 9:30? What you can see, clean move na, clean move. Okay, you can read it here. Okay, I hope you're seeing it. If you like, many people are saying this is just a gimmick, nothing will work like this, you can't predict the market like this. You can see here. Okay, I'm not just predicting the market, this is a data. This is the 40-year 50-year uncle told us like to watch the market looking onto this data. Okay, I hope you know his name. His name is Michael J. Huddleston. Okay, that uncle told me that to look these things on the market. Okay, so it's not like gimmick or something randomly happening. Okay, so I hope you see the pre-market move. And what you need, the last ditch macro. Okay, definitely. So personally, I have also taken this trade, which I've already shared on the WhatsApp channel. Okay, so I just missed this pre-market trade, and I was not looking into AM session because I know. See the real magic, that the thing I want to talk you about on the ICT, you can know when to trade and when not to trade. And the other thing that here we have freedom, like we can know the consolidation before it happens. Okay, see, I didn't even click one button inside this range. Why? I know it was consolidating. I don't want to click any buttons here because I have clicked multiple times button here, and I made thousands of dollars loss. Okay, on the funded account. Okay, so I have lose, like I've lost my funded accounts multiple times in here. Okay, so I don't want like this is experience, bro. Like ICT telling all these things by his own data. Okay, and we are back testing, and we know that the price will consolidate here. So there is a freedom, like you know when the price is consolidating. Okay, you will know why the price is consolidating and what is the real reason. I have told you here why the price is consolidating after the market opens. Okay, so this is a real, like what, a real benefit of ICT. Like we can know when the price is consolidating, why the price is consolidating, and when will the move happen, when not will be the move happen, and what is time and price. Everything on the ICT we can be learned. Okay, so yeah, let me go forward. So the after the market opens is consolidating. So yeah, I want to see the reversal because the market is showing sell side movement. Okay, so after the consolidation happens, we have taken the drawn liquidity, the price gives a pullback into this CB. Okay, this CB and this order block, the price have been mitigated, and after that I was looking reversal on the last stitch macro. Okay, so see here we have taken the buy side, which is turtle soup. Okay, we have taken the buy side turtle soup, and I just go into 1 minute, and yeah, this is a hourly CB. Okay, and I will plot the last stitch macro time, which is the 11:50 12:10. Okay, 12:10. So what you can see here, what is our drawn liquidity? Since we have taken our major drawn liquidity, the price is consolidating and creating what? Creating next drawn liquidity, which is what? This consolidation low. Okay, so I just mark my drawn liquidity. Okay, and we have what? Too much low resistant liquidity. We have taken the buy side liquidity and we have mitigated into what? Major hourly CB, and we got the turtle soup, which is the price have taken the buy side and rejected from there, and here the price is like rejecting from this order block. Okay, the price is rejecting from the order block, and the price gives what? The price drops into 50% of this dealing range. Okay, so this is our range, the high and the low, recent high and the low. The price have dropped into 50%. Okay, so I was waiting like I was not sure that the price is going for the sell side. I was adding the confluence. Okay, I'm just adding the confluence, and the price have dropped into the 50% percentage of this range, and the price gives a pullback, and the price is resisting from this order blocks mean threshold. Okay, the price is the price is rejecting from this order blocks mean threshold. As you can see here, the mean threshold has been rejecting the price here. Okay, so I'm reading the order flow. I'm just reading the order flow, and I just taking the trades. Okay, so as you can see here, we have rejected from the hourly CB, and on the 5-minute we have what? Inversion. Okay, this is a inversion, 5-minute inversion. This is how you need to read the order flow. Okay, you have rejected from hourly CB, the price have delivered into 50% of this discount dealing range, and the price gives a pullback into this inversion. After this inversion, if the price is bearish, I want to see the inversion lower portion, which means the lower quadrant has been getting rejected. See, the lower quadrant is rejecting the price. Like, I will look all these things to get into a trade. Like, this is how I took the high probability trades. Okay, so see the price, I'm reading the price. Okay, I'm getting the confluence that the price is going for sell side. Okay, so the price have came to the dealing range, the price gives a pullback, and the 5-minute inversion is rejecting there with the lower quadrant, and here we can see that and here we can see that this order blocks mean threshold is resisting the price, and for the in the 1 minute my confluence were after this CB has been inversed, I'm going to take the short. Okay, so this CB has been inversed, I'm just directly got the short, and I kept my stops here, and I just easily target for what? I just easily target for this low, and I hope you see this trend, trade which I have taken, and I hope there is a first percent FEG. I guess first percent FEG after the 9:30 opens, first percent FEG, yeah, this one. And let me show you, like I see that one of the member in the channel have been taught that what is the real magic of first percent FEG. Okay, so let me tell you that in this lecture. Okay, so this is the first percent FEG. The price pullbacks and rejected from the 5-minute inversion on the lower quadrant. The price is rejecting from this order block, and we got the inversion. Okay, so I know that many people are looking where is the change in state of delivery. Okay, so this is the change in state of delivery order block. You know, order blocks are the change in state of delivery. Think. Okay, so many people are trying to look for 2022 model here. There is no 2022 model here. There is a inversion model. Okay, once the price have inverted the CB, I'm just going to take that. Okay, That is I like, I'm not a guy who sticks with the single model. Like, I'm not a guy who thinks about the model. I'm not a person like who like okay, I didn't see my model, so this run I couldn't catch it. I'm not that guy. I'm not that type of person. Okay, I'm a person who tries to read the price, and what the price is showing to me, I will try to catch that move. Okay, I'm like that person. Okay, so I saw a, like, on the time I saw a pullback on the macro. I saw a pullback into inefficiency. The price have rejected from there, and I see a CB has been inverted, and I'm going to short for these low, and these low. Okay, so, and the other thing, this is a first percent FEG, and see, the price have tapped into the constant encroachment level. The price gives a pullback, and the price rejected from these levels. Okay, and again price drops. See, rejecting from the constant encroachment level, and gives a pullback, and taking all this inefficiency to balance, and drops, heavy drops. Okay, after that heavy drop, okay, let me add the quadrants. Okay, see the after the pullback, where does the price is rejecting? The lower portion. The even the body didn't go up of this portion, or the body closed it. Okay, above this line. Okay, see the reaction, one time rejected, taking the sell side liquidity, again come and again tapped into lower portion, and the price what drops. See how it's respecting. See, still people are talking these things are bullshits, random things. How can be the thing how can the random things happens multiple times? I don't like, there is no logic between it. Okay, the random things cannot be happen multiple times. This is not something like random. So this is how you need to read the order flow. This is how you need to read it. Okay, the price have rejected from there, we need the time confluence, the time have entered, that price have given pullback into this inefficiency in the time, and we got the reaction, we got 1 minute inversion, CB has been inverted, and this is my entry. I just entered here, and I just easily target for this sell side liquidity, and after all that also price have dropped too much, but this is our cup of tea. Okay, this is all we needed. Okay, so this is how I trade on the Monday, and this is how I miss my trade on the pre-market, and this is how I avoid the trade on the AM session, because there is confluence. Okay, so let me talk more about on this time. Okay, so when you don't know these logics, you will be definitely going into the market, and you will be reading this order flow. Okay, we have taken the sell side liquidity. Okay, so we need to go for the buy side. Okay, so I was waiting for what? Okay, first percent FEG, so it has been inversed. Okay, definitely it would be my entry, because we what, we have taken the sell side, we got first percent FEG inversed, and I will be keeping my stop loss here. Okay, and easily targeting for this high. What happens? Shit happens, right? Okay, another entry, we got SMT here, we got inversion has been inversed. Okay, I am keeping my stop loss here, and what, entry, again stopped out. Okay, and another thing, we have taken the all sell side liquidity, we got what, we got inverse the first percent FEG, again long. Okay, again long. Shit happens. Like, this whole things are pattern trade. Okay, pattern trade is what, see, this is also a pattern trade, but this trade have confluence, but this trade have no confluence, because there is no confluence in the time. Okay, this is only the pattern showing you the market is going for upside, blah blah blah, nothing. Okay, so these trade have confluence, time confluence, like PDA reactions, the everything you need to trade, every kind of things has been done here. Okay, we have sell side liquidity, and market opens low, and we have PDR is rejecting the price, and we have multiple confluence here. Okay, so this is a Monday's trade review, and this is how you need to read the market, read the whole logic in the market. Okay, this is how you need to read it. Okay, so let's go into the Tuesday. Okay, Tuesday. So what happens on the Tuesday? Tuesday we have no news, trade on the pre-market or the AM session silver bullet. Okay, so let's scroll it down and remove the time, this thing. Okay, so on the Tuesday we can see the huge drop. Okay, and the price have rejected from, I guess, this fixed midpoint or the lower portion. Okay, whenever we have something like this, like we are rejecting from these wicks like this, you need to add the gradients. Okay, you might see some magic inside that. I didn't actually look it, but let's see what is actually happening there. And I go into the 4 hour. Okay, I go into the 4 hour. You can see that the price is remaining unfilled this gap, because it's showing you that this gap has to be a breakaway gap. Okay, so let's see what happens really on the Tuesday. I actually forgot. Yeah, this is what happens. Yeah, Asia have been dropped, London have been dropped, New York have done the continuation, and I think I don't have been traded on this day, because yeah, it's actually like this is the time which you have not like thinking about the trade. Okay, like I was literally avoiding this trade because the Asia have been dropped too much. Like I will be showing you, this is days you should not be trading anytime. Okay, anytime, not in like the last ditch macro, not in like the PM session, not in like, this is the time you should avoid the trading. And this day have been moved around 600 points. Okay, so you should not be trading like these conditions, because the market is falling like, no, I don't want like that retail traders has to be entered. That is the logic of the market when the market is dropping right here. Okay, and I have told you, we have, whenever we have taken major sell side liquidity and we have drops too much and there is no great entry happens on the market. Okay, so that was on the Tuesday you can see here there is imbalance. Okay, and the price is now trying to pull back into it. What, this gap has to be breakaway gap? Why? Like I didn't even know this gap has to be a breakaway gap, but the price is showing the price doesn't want to give a real pullback into this gap. Why? That indicates like the price have all the way come upside and the price reject immediately. Why? There is no reason that the price should leave this gap. Okay, this indicates the price has to see this gap as a breakaway gap and the price needs to drop. That is actually indicating right here, so don't get confused. Okay, whenever we see some gaps has to be like some gap is remaining unfilled and we got the change state of delivery, don't think we are going for another pullback. Nothing like that happens, because this gap is showing you that it seems like it should be act as a breakaway gap, and the price is going for sell side to take all the sell side liquidity, and we like it's dropping too much. Okay, so let's go into the New York session. What happens? So this is the like I hope you understand, this is the day you should need to avoid the trading. So let's see what happens on the after the market opens. Tuesday, right? Yeah. So after the market opens, the price is consolidating too much. Like let me show you. The market opens here on this candle. Okay, 9:30 candle, and after the 9:30 candle opens, the price gives a pullback, taking out all the buy side liquidity, and the price and the price gives a pullback and came sell side and gives a deep pullback and get sell side and pullback, sell side, pullback. Like see what is happening here. The market opens, goes upside, come sell side, upside, sell side, upside, downside, upside, downside, upside, downside, consolidating, and what? See, consolidating, and this is the market which closed there. Okay. So, do you actually need to find trades in here? See, what is the real truth of the market? You should not be trading all the days. Okay, find the day which gives you better trade. Okay, find the day which gives you the better trade. Okay, you should not be trading all the day. So since the Monday, I got the great trade which happens on the market, which means a last ditch macro trade. Yeah, I'm happy for that. Tuesday, yeah, the market has been dropped 600 points, and do you need actually to trade in this market? Like, you should not be thinking to trade on this market, you should be avoiding. Yeah, this is the day I should need to avoid the market. Yeah, definitely. So you are not looking the chart, you are closing your laptop or the Mac or the PC, anything. Okay, so yeah, this is the day I just avoid because it have dropped 600 points and you don't see anything in the market right here. Might be you see something like, yeah, taken the buy side, we got the inversion. Okay, we got the inversion, you are getting short. Okay, okay, then you are targeting here and see what happens. You can see here, like, the price gives pullback, sell side, breaking structure, giving deep pullback. It will affect your mental capital. Okay, like, you should not be thinking all the times your account capital or the your account money. Okay, that is not a major thing. You have your mental capital, you should not be disturb your mental capital. Okay, so these days the time you should need to avoid. So yeah, still the trade has been happen here on the last ditch macro. There is a structure shift and you can see some sort of pullbacks, but you should not be trading to this day. You should avoid it. Okay, you should not be trade all the days. You should need to find the day which you have not to be traded. Okay, you need to find the day you have to trade it. Okay, so these day you can see that there is not too much movement happens, so the last ditch macro have been traded, but these days 600 movements. Okay, 600 points, so you should not be trading today. Okay, so that day has been move on. So let's find the next day what happens. Okay, so we avoid this day. Okay, and I'm going to show you the next thing. uh, Large day, large day, I guess. Large day, important weeks volatility. I need to show you something on my journal. Let me find it. Okay, after large day, no, this one, I think it's inside this, inside day. Yeah, inside day. Okay, once we see an inside day candle, that means we have going to have large range day. That is not the thing. If you expect the day as inside day, you should be targeted initial. Actually, this is not the topic I was finding. I think I just missed that topic. I need to see. I need to show you the real, like, what real data of mine. So I can't find it. Mm, yeah, this is the tree dice pattern, which yeah, when the algorithm start creating a short term highs every time it run the high above, and you are in the long position, high frequency trading, dumping portions of their position above the purpose of offset distribution. Like, I have told you that the smart money is going to offset the distribution. And the other thing that you can find it on the 2023 mentorship, the first lecture. Okay, 2023 mentorship first video. On the first video, you can once you find that video, you can see that after the large range day, you can see a small inside day. Okay, so that is a topic which I have trying to find it, but I couldn't see it inside my findings. I think it's somewhere inside here. Okay, I don't know where it is actually. Somewhere inside be there. Yeah, so leave it. So we have large day, so next day you could expect some sort of small consolidation inside day. So let's find what happens there. So Wednesday, right? Yeah, Wednesday. So you will be expecting that we need to see what? We need to see some sort of pullback into these levels. Okay, so we can see that grade this large wick. Okay, You should, like, whenever you see wicks like this, or important wicks like important discount wick or premium wick, everything like this, you should need to grade with the quadrants. Okay, so I just simply grade with the quadrants. Okay, and it's just going to the 4 hour. Okay, and you can see it would be refined, okay, in this time frame. Okay, so I just mark it, and I need to see the price should react from these levels, and need to see a buying to this area has to be balanced, right? So I need to see a small buying from here. And let's see on the hourly chart what happens on the Wednesday, right? Wednesday, what happens? The price have rejected from what? The price have rejected from the discount week on the Asia, goes upside, gives a pullback. London taken the low, okay, and gives buy side. And what happens on the New York? Okay, New York, what happens? Let me see. I think what is economical calendar on the Wednesday? I don't remember which I have taken on Wednesday. Wednesday is FOMC minutes day. So let's see what happens on the FOMC minutes day. On these days, like, better to trade on the pre-market or the AM session after the opening. So let's see if I have taken this trade or not. Yeah, I have taken this trade on the pre-market, but at that time also I have getting stopped out, I think so. Yeah. The longs. Yeah, so I have taken this trade on the ES. Wednesday, yeah. So what happens, I have taken this trade. So I have showed you the confluence that we have rejected from what? We have rejected from the discount discount with upper portion. Price have made the low. London made the high. We get pullbacks, taking the sell side liquidity. We get in the internal range liquidity, and I was expecting to price to give a buy side move, because we have what yesterday large range day. So we need to see what a small pullback into take out this buy side liquidity, and I have taken this longs on the ES. Okay, because ES was relatively stronger than NQ, so I just try to look for longs and see what happens. I have made a small mistake that I have entered here, and I kept my stops here, and see, on to this point I got stopped out, and I have missed this long move till this high. I was targeting to the London high, but unfortunately the market didn't get me in. The market, like, give me take my stops to this point. Like, it was better to take this my kept my stops here, but I was not expecting to happen this move. So the market get me stopped out, and it ran out. So on this day I didn't take another any trades after this large movement. And on, I think so, on the market opens, it's actually dropped. So since I've got the stops, I didn't try to took another trade, and the market shows really great move on this day. On the market opens, and I think I will try to break down it. Yeah, let's find if there anything else to, like, the price to come sell side. Let's go in the hourly chart. For the sell side, 4 hour chart, like, I need to see some PDRA, like the price need to give the pullback. So the price have been pulled back into, like, this was the dealing range. On the ES, actually get into the, yeah, ES actually gives a pullback into the equilibrium, but NQ has been failed. Okay, that is a reason why we have get a great short. Okay, so ES actually came into the equilibrium level, which means the 50%, but the NQ has been not delivered. So that is a reason why we got clean short from there. Okay, So how did this short happens? We have SMT. I guess we have SMT right up there. I don't like you can find in the market. So actually I didn't take this any kind of entries. Okay, let me show you after the market opens. After the market opens here. Okay, the market opens here. We got pullback and we have changed state of delivery. And I guess if you have double bias and if you have getting doubts, you should not be entered here, because this is after the market opens. You should need to wait. Okay, so how to like qualify your bias? Okay, how to qualify your bias? You can't just qualify your bias after getting this change in state of delivery. How to qualify? Okay, see, the price have dropped into what? The price have dropped. Let me find you the thing. The price have dropped into this dealing range. Okay, see, the price have dropped. This is the dealing range high, this is the dealing range low. The price have dropped into the 50 percentage, and the price gives a pullback. And where did that pullback comes? Okay, the price have get into this inversion. Okay, the price pull back into this inversion after this change in state of delivery. Once a candle, like if you are expecting that the candle should close here and the next pullback you can enter here, but this trade has been not delivered on that way. The price have what? The price have extremely comes sell side. So maybe some people could take this entry without closing the change state of delivery with the confluence of this. Maybe some people was expecting to the change state of delivery. Yeah, you might be miss this entry. That's not a big case. Okay, if you miss the entry, you have another chance. Okay, so you can, if you need to refine look into the 5-minute chart, you can see here you have breakaway gap. The price displaced energetically, gives a pullback. There is a CB there. Whenever we have CB and align with the inversion, you should need to see the lower portion has been rejected. And with all that confluence, you can maybe trade directly. Okay, that like if you take trade directly also, like if you taken the trade directly when the price hits here, you can easily keep your stops here, because the price should not need to deliver into these levels to deliver the sell side. Okay, so you can I guess you can easily target for these low. You might be get partial here and another partial here, or the full TP here. I guess so you can take the full TP and see the magic. Where did the price ends? Discount weeks constant engrossment level. See the where the price rejected. Yeah, this is the low. The constant engrossment of the discount daily wicks constant engrossment level. So random thing now. Okay, random. So the Wednesday happens. Thursday, let's see on the what shows you on the economical calendar. Thursday we have small news. Fed manufacturing index 830. We can trade on the pre-market and the AM session if you have trade. Okay, so I guess this is the on this week, the best one of the best trade is on the Monday, and the second best trade is on the Thursday. Okay, what happens on the Thursday? So we identified that we got pullback into this range 50 percentage. Okay, or not on MNQ, on the ES we actually delivered on the 50 percentage of this range. Okay, so since that happens, you are bearish. You don't need to see what? You don't need to see price going upside. Why? The price have already delivered 50 percentage of this range on ES. So in the NQ you should not be seeing that, and there is no reason to balance here in the price. Okay, and on that time you have sell side liquidity also, so there is no case that you are going for sell side again. Okay, so let's see what happens on the Thursday. So I just graded. I've told you that whenever you are this is a Thursday candle, and just grade this week. Okay, that's enough. Like whenever you see previous days wicks like supporting you, that is a real signature. Okay, so I just grade this week and I just mark this CB. Okay, so if the CB like if the price have rejecting from here, I would see this as a breakaway gap. Okay, if the price is taking this buy side liquidity and rejecting from lower portion also, still I will be anticipating this is a breakaway gap. If the price is rejecting from the 50 percentage, I would be not seeing this as a breakaway gap. Okay, so since I will tell you the logic. On the ES we have delivered 50 percentage of this range, and I have told you there is no reason to come into this gap because we have delivered the 50 percentage equilibrium, and the price should reject only from the lower portions here, something here. Okay, so I have graded this wick. Okay, and let's see how the reaction happens. So let's mark it as a breakaway gap. Okay, onto the 4-hour chart. See, consequent encroachment level. Okay, this week's consequent encroachment level are rejecting their hourly chart. Let's see what happens. Yeah, on the hourly chart, I guess the London Asia high has been taken. On the ES, Asia high, this high has been not taken. Okay, so there is a minute SMT. Okay, so what happens on the London we have delivered lower. Okay, London we have create a structure lower, and what we have, sell side liquidity. What is our week's drawn liquidity? What is our entire week's drawn liquidity? This sell side liquidity and this inefficiency has to be balanced. Okay, so since that is our drawn liquidity and we don't need to see the prices going upside, so what, you don't need to look for longs. Like you don't need, like there is no imaginary thing like you need to go upside and do that thing, this thing. You might be can expect to take out this buy side liquidity, but the price is not showing indication that we are going to take this buy side liquidity. The price is creating sell side narrative, because this BC has been inversed here. Okay, if we have to take this buy side liquidity, the market might be going like support this BC. This BC has been supported and the market could go upside, but the market is not showing any willingness to take out this buy side liquidity because this week's constant encroachment level is respecting here. Okay, and the price inverse this hourly CB, and the price gives a pullback and it rejecting from the lower portion. Okay, let me grade it this thing. See, lower portion rejected. So what happens? What is the protocol? What is the protocol on the Thursday? Thursday, trade on the pre-market or the AM session silver bullet. Okay, so let's see if we got any massive entry. So I didn't take on the London. On the pre-market I have entered on the YM. Okay, so I was looking in the market. After the market opens 7, we have taken the buy side. The market has been displayed too much. Okay, so I was looking into the market and MNQ has been displayed too much. Okay, ES, let's find ES. ES has been displayed too much and ES got a pullback, but what, MNQ has been not got pullback. Okay, and the YM, what happens on the YM? YM got pullback and YM has EC target, ECPC target. Okay, this was my ECPC target. Okay, lower resistant liquidity. So this thing on my eyes like got like yeah, very nice entry. So I just entered here, kept my stops here, balanced area, so no need pullback, so I just easily target for this low. Okay, so this is my pre-market trade on the Thursday. So this is how you need to find the dollar, and I have already told you how did I took this entry and how did I read the order flow. And after let me tell you, after this massive move, what did I teach you on the Monday's price action? Large move happens, drawn liquidity is taken, and what will happen on the market opens, same logic. Okay, large move happens, we have small drawn liquidity left, but large move happens. So what happens on the after the market opens, the 9:30 opens, consolidating, too much consolidation, and what, and we have major draw. What is our major draw? Tuesday 4th August RTH gap. That gap is our major draw that has to be taken. Okay, So since this day I have major drawn liquidity. The price have moved on the pre-market. The 930 is consolidating. After the 930 consolidating on the lunch macro. Okay, so if we have pre-market large move, you can see a great trade on the lunch macro. So I just look into the lunch macro. I have not looking into the after the market opens. I was looking into the lunch macro. We have got SMT there. Okay, we have got SMT there. After the SMT, this inversion on the 3 minute. Okay, on the 3 minute. Okay, on the 3 minute, I've got one small inversion here. So on that inversion, aligned with the 1 minute. Okay, I just entered. This trade was not on my funded account. This trade was on my paper account, which on this time I was living. Okay, I was live streaming. So and some of my members also saw this trade. Okay, and I was easily targeting for this low, but unfortunately what happens here, I entered on the 3 minute inversion plus this change state of delivery. The price gives a pullback, delivered lower, gives a pullback, and what will invalidate our trade? 3 PDRA. Whenever we have shown 3 PDRA invalidating our trade, which means our direction is wrong or the price is choppiness. Okay, so 1 PDRA is this CB, small CB. Second PDRA is order block. Third PDRA, this week's midpoint. Rejecting now, rejected. Take sell side liquidity. I have taken the partial, and there is a 5 minute BC right up there. From the 5 minute BC, the price goes upside again. Okay, after that what happens, like on the lunch macro also, the price couldn't deliver the major drawn liquidity. If the lunch macro fails to take that low, of course on the PM session, what I look into the PM session, on the PM session I just look, the price gives a D pullback and we have CB here. Okay, 5 minute CB. On that 5 minute CB, and this is my one of my best trade of this month, and I think this year maybe, yeah, because this trade have given me massive winning. Okay, so yeah, I think 5 minute, right? Yeah, 5 minute, there is a BC. Okay, I just mark it, and if I need to get short, I need to see this 5 minute BC has been to inversed. Okay, so the price have tapped into this BC and goes upside and rejected from this 5 minute CB plus this wicks midpoint. Okay, this wicks midpoint, and it rejected from there. Okay, onto the 1 minute. See, order flow reading. This is how you need to read the order flow. Rejected from the constant encroachment level of the 5 minute wicks. Okay, the price rejected. 5 minute BC has been inversed. Okay, let me remove this. Okay, so I saw change in state of delivery here. I get short here on this pullback. Okay, I kept my stops here. Okay, small stops, 10-point stops. Okay, see how, like, I'm trusting the ICT. I need to see this gap as to be a breakaway gap. That is the reason why I kept my stops here. Just 10-point stops. Okay, 10 points is the very minimal stops you can see in the market. Okay, so 10-point stops, and I just easily target for this RTH gap. Okay, 1:12 risk reward trade. And what is my sell side liquidity? This is my sell side liquidity, and this gap is my drawn liquidity, and this is my sell side liquidity, and this is my initial liquidity. Okay, so I have entered here, and I was reading the order flow, and this wicks midpoint is rejected here. The wicks are doing the damage. The bodies is telling the story, gives a pullback into this BC and give another pullback, and the price is rejecting from this wicks midpoint, and it drops there. After that drop, you have a inversion here. Okay, you have inversion here. I'm just adding the quadrants. Okay, inversed. After taking sell side liquidity, price gives a pullback, rejected from the lower portion. After the price came into the dealing range discount level, which is the unmitigated BC. This is the dealing range, and we have small unmitigated BC right up there. And after the price came into that BC, okay, the price came to discount unmitigated BC. The price gives a pullback, taking out this buy side liquidity. Okay, turtle soup, the price need to take what? Turtle soup. Okay, turtle soup, what? The price is just taking the buy side liquidity and reversing from there. Okay, where the price have rejected? The price have rejected from this inversion lower portion. You can see the signature and easily framework targeting for this low. What time? What time does it happens? Time factor, what freaking time? Okay, macro. Okay, 1250 110 macro, and the other this trade also happens on the macro 150 210 macro. So these both trade has been followed on the macro. On the macro, it gives pullback rejected from the constant engrossment level, displays a change state of delivery, full signature on this trade, full signature. Okay, and I guess what yeah, leave that topic. That is one hidden thing, and I will be share another another lecture. Okay, so I hope you see, like, this is the best trade on this month and this year, I guess. So yeah, so yeah, very nice. Like, after, yeah, leave it. After this trade on the Friday, I have taken trade on the ES actually. Yeah, on the Friday, symbol logic. Yeah, Friday trade I have already reviewed today, and leave it. Let me review it again. So Friday we have previous daily high, previous daily previous daily low, previous daily high, 4 hour, and we have rejected from here. Let me fastly review. So we have rejected from here yesterday, Asia run high, London run high. We have rejecting from this order block mean threshold. We have rejecting from this new day opening gap, high and low. Price have rejected to take out this low resistance liquidities, and the price rejecting from this rejection block, and the NQ is relatively not stronger, but the ES is relatively stronger, and easily I got the run for the sky. I just took this longs. Price is rejected from this week's midpoint. Okay, constant engagement level, and price rejected there. I got the change state of delivery, and I just long here. I kept my stops here, and I just target for this high. Yeah, this is my trade on the Friday. Yeah, other than I didn't take any trade on the Friday, I guess. Yeah, I didn't take, because on the Friday I was looking for to take this short, but unfortunately it didn't happen. The market drops deeply. After that, drops, same session consolidating and creating the high, delivering to high, and you can see here TGIF pullbacks. When I frame this candle into TGIF, this thing, I'm smart, and see 1:2, like 0.2 level rejected. See, exact rejection from there. So yeah, I guess, yeah, I'm too tired by talking, so I hope you understand all the logics of this week's reading the price. Yeah, that's it.